Welcome to the Property Podcast, where great minds in real estate get together.
Welcome back to the Property Podcast. I'm your host, Angelina, and joining me today is a true expert in the field, Lou Pacelli. Lou is the founder of Sentinel Harbor Capital, is a multifamily syndicator. Lou, welcome to the show.
Hi, thank you. Thank you, Angelina. Thank you for having me.
Of course. So with your background in helping high net worth professional, why is your mailbox money through syndication a better fit for a busy executive's lifestyle than a traditional property ownership?
Well, they can have the benefit of owning real hard assets without the work involved. The work involved. I mean, if you're a busy professional, you don't have time to manage the property necessarily. You may not even have the wherewithal. You may not even have the expertise. If you're a high net worth individual in a different business, a different type of business, and this isn't your core business, you can certainly benefit by having professionals manage the asset, and you just collect a dividend from the property. Yeah, so we manage the assets, we handle the returns, and you get the benefit of the cash flow and the eventual appreciation.
And how big is your team? Like, how many people are involved in this?
Right now, I just started the team. I have a group of people that I have one analyst. I have myself. At this point, I'm outsourcing property managers, but I have a property manager. Ideally, as far as acquisitions, I have an acquisition manager and myself, and we go out and look at properties. So I also have a partner in Texas who's been doing this in Austin, Texas as well, because I'm in New York. I'm in the New York market. So, and I prefer to buy properties in some decent secondary markets. And I found the best way to do that is to partner with other asset managers that specialize in their local market to basically get the expertise in that local market. So for example, if I want to buy properties in Austin or San Antonio, I partner with another property asset manager out there who's been successful. And that's really right now how I'm doing it. So we do have an ecosystem, if you will, of a group.
I understand. And so what's the core financial advantage of pulling capital into a syndicate versus an individual trying to invest alone in today's market?
Well, it's like I said earlier, an investment vehicle, I mean, obviously it's not a liquid investment, so it's not the same thing as like putting money in a bond market or putting money in a stock market investment or ETFs, for example. But it is an alternative investment that is good for like illiquid money that you're willing to put to work for 3 to 7 years. So I do tell people that, it is for accredited investors, people with high net worths who are not putting all their money in illiquid investments, but a nice sum of it, just to get that diversification. Hard assets are a good protection against inflation. The hard assets are a good protection against devaluation of the dollar, which is what's going on. So when push comes to shove and the dollar is not the only real investments are hard assets, that they're the only things you can actually count on. But that's really what I focus on. I focus on those types of investments and the benefits. Like I said, the benefits of an investor, of high net worth individual having those investments. For example, if you're a doctor or an attorney and you don't specialize in real estate, managing real estate may not work for you on your own because you just don't have the time to do it. So we can take that. We could help you out with that. We could do that for you, and you get all the benefits of that investment without all the work involved, because it's not a hands-off type of investment. You set it and forget it. You have to manage the asset.
Makes sense. So as a former fractional CFO, how do you explain the real risk versus reward of a multifamily syndication to someone used to more traditional lower yield investments?
Well, the risk reward, well, again, it depends on your tolerance, but the risk reward is there. It's the real risk is in tying up your money for the long period of time, and if you need it. Another risk is the market, where the market's going to go in the near future, and where the interest rates are going to go, the interest rate risk associated with that. We feel that right now interest rates are coming down. They've been up. And so but we're in a position now where we feel that a lot of the risk is coming out of the market for people going into the market. People who have been in the market at these lower interest rates, these loans are coming due now. Their interest rate risk is high because these loans are coming due now. These 3.5% loans are coming due now in this quarter and in the first half of next year. And they're going to have to refinance those loans at much higher, in some cases, double the interest rate that they're paying now. That risk alone will essentially wipe out a lot of assets as far as literally bankrupting them, because it'll eliminate their cash flow, their positive cash flow. That sounds bad for the people who are in those assets at the low rates now and have to refinance. But for people that are liquid right now, that are looking to get in the market, there's opportunity. There's opportunity to buy at a lower price because the market will come down because of that. And we're positioning ourselves right now to be in that position. I'm positioning myself to be in that position now where we can come in and grab some of those assets at a reasonable price. Now, there is some risk to that. Institutional investors have been bidding up the property. They've been buying up land like the big players like BlackRock. They've been buying stuff, but eventually they're gonna lose. But the thinking is that they can afford to lose, but you can't afford. I don't care how big you are, you still can't afford to lose in perpetuity.
I see.
So eventually those properties have to come down. And a lot of those properties are going to end up in to be bank owned. So, and that's an opportunity for people with liquidity as well, because we could go in and buy the properties from the banks who are very incentivized to get rid of them at a good price, because they just have to unload the assets. Where the owners might hang on to them longer in hopes that the market comes back, banks will certainly liquidate at a good price.
Interesting. And so if you were to have one of these clients where their interest rate are coming to the end, are due to be renewed, what would be your advice to them?
Well, I mean, it depends. It depends on where they are. If their analysis shows that they're going to be that they're going to be negative cash flow, my advice would be to sell, get what you can out of it. However, it depends on when they purchased it, how long they've owned it. If they've only owned it for a short time and they're going to sell it at a big loss, well, then that's an issue too. There is strategic bankruptcy. They may have to, as long, and then the question is what's their loan structure? Do they have non-recourse? If they have a non-recourse loan, they could potentially, do a strategic bankruptcy and get out of it without too many problems. And then that's the scenario where someone like me with the liquidity would come into the bank, take the opportunity to buy the property from the bank or to buy it out of bankruptcy if they're so inclined.
Great. So let's talk about my favorite topic, AI.
Okay, sure.
So in your opinion, can AI actually predict which distressed assets are prime for opportunity, or is your expertise still the ultimate filter there?
It's a good predictor, is a great predictor of quantifiable statistics. They could definitely predict based on probabilities what's going to happen. So yeah, it's definitely a great tool, and that's how I see it, as a tool. It's definitely a great tool for good actors who want to make this, who want to again use it as a tool to predict where the market's going to go mathematically and predictively. But as far as like emotional type thinking and in a sense, and sort of that's what you want to do. You want to take the emotion out of the decisions. So in that sense, I think AI has a really good advantage. And I think there's definitely a future for it. I don't know that it's 100% there yet. And I'm not saying that AI is not there. I'm saying the people aren't there with the understanding, I should say, on how to use it, how to make it work for them. But yeah, it's definitely a good tool and a good predictor of future events based on probable outcomes.
But would you blindly just go out of what the AI tool is predicting, or would you still put your expertise into the mix?
Well, I would try to find confirmation from my expertise. I've done that where but as long as it's logical and it's predictable, and you really want to prompt it to know the local market, because every market with real estate's different. So you really want it to focus on the market you need it to really be honed in on that market. But yeah, so I mean, you can check it against other statistics and to confirm or to support it or to reject it. But I would suggest you do that as best you can. Yeah, as far as going blind, no, I still consider it a tool of one of many, and you should use it accordingly as a tool in your quiver, so to speak.
That makes sense. That's totally understandable. In the end of the day, there's always a human touch behind all that technology. We're the one dictating, we're the ones training.
I think eventually we'll get to the point where we can rely on it. I mean, we'll rely on it more and more. It's like anything else new. I mean, you're not gonna give up control completely right away. Yeah. But as time goes on, right now everybody's like, oh, that's AI. This is it isn't real. Well, eventually it's going to be real, and it actually is real.
Yeah.
And so the people who are saying it, so it's like anything else. It has to hit critical mass in the minds of the people. Once it does that, then it could be used. They just have to get used to the idea. And then once that happens, it'll be off and running. I mean, it happens with every technology we've ever had. I mean, from the wheel to computers, no one wants to get on an airplane when an airplane was invented, but now everyone jumps on them, So it's it's the same thing.
Yeah, that's a great analogy. And speaking of AI, how is Sentinel Harbor Capital leveraging AI right now to make property management more efficient?
I haven't really focused on AI to make property management more efficient. I have focused on an AI product to help sales process and the negotiation process. I have AI agents that can help with legal analysis. I have AI agents that could help with compliance. I have AI analysis that could help with raising capital, because right now that's the big component. And then I will be creating AI agents to do the analysis. I have used ChatGPT to do some analysis on my own. I've been sort of playing around with it, but I'm going to be specifically creating not from ChatGPT. I'm a partner in a product called Acti, which I could talk about another time. But it's a unique product that we're putting out, and it's coming out right now. It's used to help in the sales process and the capital raising process. But eventually, again, I'm also using it in the legal process and in setting up the legal structures. And then eventually, we're going to use it for analysis and to try to predict the outcomes of the success, the probability of success on a particular asset.
That's very interesting.
Yeah.
And so finally, how do you see syndication as a powerful way for BC professionals to build a lasting legacy beyond just their traditional careers?
Well, I mean, yeah, well, if you have accumulated assets, if you have obviously a portfolio, it should be part of your portfolio, just like stocks, bonds, gold, silver, precious metals, whatever you choose. It should be a piece of your portfolio. I don't know. It depends on the portfolio. We could talk about that. It could be 20%. It could be, but it should be a piece of your portfolio to pretty much help diversify your portfolio. Absolutely. And it'll definitely grow your legacy in a sense that it'll grow your assets that you can eventually, and it's not going to grow. It's not going to create your legacy by itself. You still need to create that generational wealth that you could transfer, and you need to create that vehicle to transfer it. And that's beyond my scope. That you would need a legal team to basically create a transition, a legal estate to transition the assets with the lowest friction, if you will, of taxation and stuff like that. So you can transfer the assets to your next of kin.
That's very interesting.
That's really the key as far as a legacy. How do you get those assets with the least friction over to your children and your grandchildren? for example.
I see. Thank you so much. And I have a question for you. So you mentioned about the new app that you're working on right now. Are you actually developing, like you're working with developers?
I'm working with a team of people. Actually, I have a larger team of people that are working on a product. It's called Acti. We have money going into it, a lot of money going into it, millions of dollars, and we're talking to people, some pretty high up people in different businesses to bring it to market. Right now, it's not available to the general public, but we're working on it. And it's like nothing I've seen before. Offline, I could show it to you. I could show you a demo if you're interested. It's nothing like I've seen before. The agents are actually really good at reading people's emotions and being empathetic, which is rare, doesn't exist in AI yet. And they're working on it, and we're creating it around the entertainment industry. Actually, it's amazing. They're creating it around the likes of Pixar and Disney, where we're creating these characters to literally that do different types of things. Like we have a character, Jeeves, for example, who's a genius in everything legal, and he just bring any legal question you have, state by state. He just total recall. He remembers everything. So, and we have attorneys creating that. We have attorneys creating that. We have agents that could cold call, warm call, and with empathy, and bring people in, with integrity and empathy to help them come along and, and what we call get to a yes answer, and build influence through human emotion and empathy. We're working on that, and that's really, I think, the next level, because right now all AI is doing, everything I've seen, is it gets you on if it's a sales oriented product, it's getting you on a phone, and then it basically wants to transfer you to a human to discuss the details. This thing actually can discuss all the details, have a full conversation, almost to the point where it's like a human.
Yeah.
And you could have a full conversation with them. And they bring you in. They bring you in with what we call level 5 listening. They hear what you're saying. They respond to what you're saying. They're not just prompted to say certain things, regardless of what you're saying to them. They actually physically hear what you're saying and respond to your input, which is amazing. And I wouldn't tell you this if I haven't seen it working. The public hasn't seen it work yet. We're still we're working on this, and we have some real money behind it. You should see it come out next year, and I'd be happy to demonstrate it for you on the side. But yeah, we could certainly do that.
That would be great. So you're really bringing the human touch into AI,
we're really trying to do that. Yeah, we're really trying to make it. And a lot of people who've seen it are literally frightened by it, because it acts so human that they're actually afraid of it.
Yeah.
So we get all kinds of people. We get people that are like frightened, and we get people that are excited by it.
Yeah.
And I will warn you, it's like any other tool. It could be and this is what I stress. It's a tool, and in the wrong hands, it could be used poorly. And in the right hands, it could be used beautifully. And that's really what we're focused on. We're focused on bringing this to market and making it useful for humanity, and not just beneficial for our corporate purposes, but also beneficial for humanity. We're bringing it, for a lot of different reasons. Our group focuses on bringing this to market integrally. So, keeping it that way as much as possible. But that's really what we're trying to do with this. I'm pretty positive it's gonna at least, initially start that way.
Yeah, it's gonna be a boom. Let me tell you, something that nobody has thought of. So, and I'm pretty sure you and your team are doing a great job. If there's so much money injected into it.
Yeah, the money's we've gotten some really good interest in it. So, so I think we're gonna see something really serious. It's gonna change a lot. Now, I'm not sure if our product. I don't know what larger companies are doing, but we're certainly trying to bring this out.
Mm-hmm.
I mean, I've seen, like I said, what I've seen out there so far is very rudimentary, very not very interactive. But that doesn't mean it's not, other people aren't working on it.
Yeah.
So it's going to be a competitive market, but we're definitely we're in that competition.
Yeah. Congratulations. Congratulations on your up. And I'm looking forward to see the demo like in the new year. Yeah. Look, thank you so much for sharing your insights with us. I really appreciated your time, and it was very great to have you on the show.
Thank you, Angelina. Thank you for having me.